Good morning. Okay, so since the last video, which was on Tuesday, I think we've shown that we got some pretty successful shorts in there. If you recall, the last update video, we were up in this range and we called out for a short here coming down. I was targeting 11.5. Turns out it went significantly lower than my targets. In this instance, I did get out at 11.5 and I've stayed flat ever since, just because even before that, I'd already met my weekly profit goals. And now with the 11.5, I've doubled my weekly profit goals. So I've been fine waiting for the next trade opportunity. And so this is just an update, but we always want to make money, right? So what would have been the better thing to do? Instead of getting out at 11.5 and just going about my regular workday, what I could have done was price waiting, which I think we've talked about before. But as price goes down, instead of getting out right here, I could have continued to adjust my stop loss. So I could have put my stop loss here, price goes down, it then breaks, when it creates a new lower high, I would then come back and then, set it here, and then price continues to go down into this zone, and my price, my stop loss would now be here. So in this scenario, my stop loss would still be at 11, my target, right? So I'd still have it, and maybe I'd be making the exact same. But the point is that I would have had the opportunity, if I wanted to get out down here. I mean, technically this area could have been the area, and maybe I would have gotten out here at 108.3. So from 115 to 111, that's 3,000 change in price action, all the way down to 108 from 111, so approximately another 3,000. So I could have doubled my profit there just by doing price waiting, which again is adjusting your stop loss to each next lower high or higher low if you're longing, until you get to the point where you get stopped out. And hopefully the majority of the time you're getting more than what you would have if you set your target, just took your money at your target. But it's also not necessarily just doing with your whole position. You could get out half your position and let the rest be left for price waiting. But anyway, we crushed this past move. We also crushed this long, right? So we got in most of this long last week, crushed this short this week. So we're doing great, but we want to keep the trend up. So where do we go from here? Well, zooming out, as you guys know, I've said in my prior videos, these blue areas are areas for the zone areas that you want to focus on, where you expect price to respond to on the monthly, on the weekly, on the daily. So this is a monthly bullish order block. If we were to zoom out for the monthly, you could see that this entire range here is the last down candle before the up candle that broke market structure. This is a monthly fair value gap within that zone. On the weekly, this is the last, I'll just show you on the weekly, this is the last down candle before the up move that broke the most current market structure, and we haven't had a significant displacement to the upside since then. And then on the daily, we have this daily fair value gap that was created on that October 10th wick down. And this is still being respected, right? So prices traded up into it, rejected. Prices trade up into it again, rejected. So this remains, we'd like to see this overcome, and when it's overcome, it'll probably go to the all-time high, although it does have a daily order block, bearish order block to fight up against. So where are we at now, and what do I think we do from here? Well, I'm looking for reasons to go long now, right? So we've traded into this weekly bullish order block again, clearly bounced off of it. What is this yellow zone? What I'm going to start doing is the yellow is more on the hourly and the blue is all the higher time frames. So technically what I'm seeing here, delete that, that's the break in daily market structure. What I'm seeing here is this is kind of your lower high here that is being broken by the hourly. It's not super strong, but I think it's strong enough. You have a displacement here, you had an area here of consolidation, broke down. Now we had some significant displacement up through that area. So I would call that a break in the hourly market structure. Technically, the last down candle before the up move that broke market structure is what you want to look at. If we look at the 4 hourly, that's not the case yet. On the H4, technically you'd want to see it break above here, right? So you'd want to see it break above here before you confirm H4 is bullish. But I don't trade that way. I trade on the hourly, and it might result in more inaccuracies or trades gone wrong, but you also get better entries. So I'm okay with that if I'm wrong every once in a while. So this could come up and this could nuke. I'm honestly hoping that it does nuke a little bit. Let's just imagine for a second here that this here is the current leg that is going to be respected. What I'd be looking for is, I don't think it's going to trade into this zone. It could, if this is the order block, it could. But when you lay out order blocks, right, so this is a bullish order block, that doesn't necessarily mean that every single time you now need price to trade all the way back down into it. So it doesn't mean that we necessarily need the price to do something like this and get in here before we zoom in on the 5-minute and see another market structure break to the upside before we enter right here and then hope that it's going to do this. Price may not do that. Price may instead do something like this. It might come down, and it might break into the 0.5 to 0.618, and it might begin to turn around here. Maybe it breaks through again, and then it comes through, and then boom, you have a break in market structure on the 5-minute. And then it comes back down again here, and boom, right there is where we enter. Right? So again, comes down, goes into your discount range of this long opportunity. You see a lower low formed here, comes up, it breaks through right here on the 5-minute. Again, this is just hypotheticals. When that happens, you then look on the 5-minute to enter again when price then trades back down into it. And the reason this method is, again, it's basically a 3-step method where you identify your trading areas where you want to do business. Then you zoom in and wait for a market structure shift on the lower time frame where you're willing to do business. For me, that's H1. Then once you get confirmation of a market structure shift that you're anticipating, whether that's long or whether that's short, you then wait for even lower time frame confirmation. So in this instance, we've now had the hourly market structure shift. Now we're going to zoom in, we're going to wait for this to trade into the area that we want, which is hopefully down here. And then we're going to zoom in even more. We're going to zoom in even further down on the M5. And we're going to wait for the exact same thing. What are we looking for on the M5? I just told you. Basically, you have that higher low being formed, right? Or so you have a lower low here and then a breakthrough of that, right? Break in market structure on the M5. And then you enter right here. So that's the goal. That's what we want to see. Now, personally, is that going to happen? I don't know. I have no idea. I have no idea which way is the market going to go. But trading isn't about predicting. Trading is about reacting. And what we're doing right here is reacting. So we'll see what happens. I hope we get an entry, around the 107, 108 area. That would be great, because a long entry down there from 108 moving up higher to then breaking through 116. I mean, you're basically redoing this entire move that we just caught before, which would be tremendous. Now on the flip side, this could just be a lower high, and this could just be getting ready to nuke down here and go further down. So we have to be ready for that too. And how do we protect ourselves against just longing blindly once it gets down to this point? You're waiting for confirmation. Let's say it comes down here and we never get that M5 confirmation, right? Or let's say we do, and then we get stopped here. No big deal, right? Because you're entering in. Let's see, it's here, right? No, it's here. I'm terrible. It's literally right there. It's showing me where it is. So let's just say we get an entry right here, okay? And my stop is right below here. So right now, my target would be, probably 117.5 where I take my first profit. But I'd be hoping that this thing goes to new all-time highs, right? You have an 8R. But even if we just go to, the most next reasonable take profit area, 117.5, you're still looking at a 3 to 4R. So that's a good trade to me, right? And some people risk 1%, people risk 2%. If I'm really confident in the trade, if I really feel like it's a good zone and a good target area, I might risk 3 or 4% of my portfolio. But in this instance, I feel like for a long, if I get really significant confirmation, I might risk, I don't know, a few $100, see how it looks. But then if we lose that, right, and it comes down here, well, okay, so we missed one trade, but that doesn't mean anything. That doesn't mean anything because it could just continue to come down, and then we look, okay, so it wants to break this market structure here. So it wants to break this low, so then it probably trades down into here. And then honestly, I don't know what's really holding it back from breaking other than just this weekly bullish order block. Let's say we're ignoring this wick. Maybe it wants to break this low, right? So it's already broken these. Hasn't broken this, so maybe it wants to come down and break the 104 area. Well, I think technically it did. It wicked through that, but maybe it wants to go through it with displacement. Maybe it wants to make equal lows here on the weekly bullish order block around 98, and then recover. So it would be a shame to miss that move. Let's go down to the hourly. As this video goes a little bit longer. But if it does come down here and nothing is changing, well, then maybe we consider shorting, right? Maybe we short with a stop above here. So let's imagine it comes down here, no reactions, right, at all. Technically, we're still in short territory. If it comes down here and it breaks through, I'd probably look to get short again. Because in my opinion, if it's breaking through here and then it's rebounding up here, I might want to look to get short in this area. Because to me, it looks like it just wants to break through and continue to break through. So I think if it doesn't hold the most current lower high, higher low that we have right here, then I think it wants to come through and break down, maybe even start to approach 100K. So that's the update. We'll see what happens. I'm looking to go long right now if I can get in, if it'll retrace for me into these areas. But I don't know if it's going to do it. Let's see if it'll give it to us. If not, right, if we're not getting this entry that we're hoping for, and let's say last update, let's say it breaks through this high here, right, it breaks this market structure here. Well, that's great. It's now broken that. I might then zoom out to the H4 and say, okay, so this is now my next market structure shift area. And now I have changed this zone to here, right? So this is now the last down candle before the up move that broke market structure, and I'd be looking to enter there. And let's just say again, this is the full leg before it begins to retrace. I'd still be looking to now get in around this area, 109, 109.7, 109.8. So again, long the retraces, short the pullbacks. It's pretty straightforward. The process, this technical analysis, this is based on ICT methods, but I think it's pretty valid. I've been trading since derivatives on Coinbase became legal in the United States, which was July of this year. I've been following the ICT methods for a while, but never really actually traded them because I didn't have anywhere to really do that in the US. But now I can do it on Coinbase, and it's great and it's fun. Start small. I've made a few thousand. I'm gonna keep going here, and hopefully I can continue to grow my small portfolio. But that's it. Let's see where we land.